Welcome back. Jiten Parmar joining us in the studio this morning from Aurum Capital. Jiten, good to have you with us. Let's talk about the broader markets because that's where your focus is. And of course, we've seen them completely battered, lagging behind, and particularly as we head into a new year, a new decade, is there scope for a substantial revival in the broader markets?
So our view is that I think broader market is at extreme polarization. If you see the A group stocks are commanding a 94% market cap, whereas all the other stocks are commanding only a 6% market cap, which is something which I have not seen in the last 20 years. So something has to turn. We don't know when, but I think in the near future, as the economy revives, we will see a lot more outperformance by the broader markets.
Okay, so you are expecting a larger improvement. What about the kind of sectors, pockets, themes that you're focusing on?
So I do a lot of contrarian investing. I will look at sectors which are beaten down, and there is a chance of them turning over. For example, I'll give is something like cement, which we liked some time back, and we think that this sector is something which will turn around and will do very well in the next 2-3 years. Another one which we looked at recently was telecom, and that's where we have invested into when it was really in a bad shape. But the whole idea was that it was a question of it being a 13-player market to a 3-player market, and basically you have to understand that I think for a market as large as India, you will not have less than 3 players. Okay. So we were expecting that government will support the sector, and that is exactly what has happened. Prices will rise, and that has happened in start of December. So I think this sector will survive, and now I think is when this will significantly outperform. So a lot of our investing is based on reversal to mean. So in cyclicals also, for example, in commodities, we generally buy when things are really bad, and the sector or the stocks are available at a significant discount to the replacement value or price to book. We don't look at earnings because earnings will always be skewed. When there is a down cycle, you'll have really bad earnings, and when there is a good cycle, you'll have tremendous earnings. So to give an example, a graphite electrode company a few years back had an earning of 1 rupee per share. That same company 2 years down the line had an earning of 850 rupees per share. That is the kind of variance which can happen in cyclical companies. So you ought to be able to, and the funny thing is the PE was 150 when the earning was 1 rupee, and the PE was 5 when the earning was 850 rupees. So what we always, I talk about in my presentations is that you have to buy when the PE is very high and sell when the PE is very low. It's very contrarian and counter intuitive, but that's how one invests in cyclical companies.
I just want to dig a little deeper on the point that you were making about telecom, because just yesterday on the sidelines of the pre-budget meeting, you had Sunil Mittal saying that he expects the ARPUs at about 300 rupees per month in the future and wants the TRAI to intervene on tariffs as well. Now, we all know that it's not as much tariffs, but the issue comes with the AGR dues. Do you really think the incumbents, out of which one, Kumar Mangalam Birla has gone on record saying that he'll have to shut shop if the government doesn't intervene, do you really think there is that sizable opportunity as an investor in Bharti? I just want you to elaborate on that a bit.
So I will not talk on individual stocks, but I can talk on the sector. And I think, as I said, it's a 3-player market right now, and I think it will remain a 3-player market. I've traveled a lot across the world, and even in the much smaller countries, I've seen minimum 3 players and 4 players. So I think it's imperative for the government to let it not be a duopoly or a monopolistic situation. So I think all 3 players will survive.
So you're betting on government intervention?
Absolutely.
Okay.
What about cement? That's another pocket that you're looking
So
at.
cement, I mean, if you see start of this year, prices started rising, but then we had this economic slowdown. There was some, a delayed monsoon and a much longer and bigger monsoon, which affected offtake. So I think in Q2 and Q3, you saw that volume growth was negative for most companies. But I think that will correct as now with rural also expected to do well from Q4 onwards. I think cement offtake will be higher. And the way to look at cement is, you look at capacity utilizations and what is the capacity addition planned. To have a greenfield, it costs about $130 per ton, is about the cost for a greenfield plant. In India, cement companies, lot of cement companies are available at about 25 to 30% of replacement value. So I think that sector is something which, as the capacity utilizations move from 75% to 80% plus, I think they will have pricing power. And I think that's when cement stocks will rock.
Okay. The other beaten down pocket, Jiten, has been autos because of the structural issues with the entire sector, and along with that, ancillaries as well. Do you think there is a sizable opportunity here, or is it a sector wherein there are too many grays, you don't know how the challenges in the future are going to pan out, so it's best to stay away?
So again, one good thing is that, now people are acknowledging that auto is also cyclical. I think last year, people were not even acknowledging that auto can be a cyclical. So I called it moderately cyclical. Auto is definitely cyclical, and I think we have gone through some tough time for the last 1 year. So I will divide the auto into three or rather four: the farm equipment or the tractors, CVs, passenger vehicles, and two-wheelers. I think CVs
Even
are
the ancillaries.
Yeah, and the ancillaries will be related to that. But these four broader segments, I think CVs are the one which I think will take much longer time to revive, unless there is a very, very good scrappage policy coming from the government.
Okay.
But the others, I think there will be revival soon, is what we are seeing. And we are seeing that some of that in the numbers of the last 2 months or so. So auto sector should revive. And for the ancillaries, I think we should also look at the fact that, what we have done is we have tried to look at businesses which will be, not that much disrupted by the eventual, adoption of electric vehicles, EVs. So try to look at businesses where, the EV disruption will not be, something which you have to worry too much about.
Just very quickly on commodity stocks as well. Do you see anything spurring them to rally, particularly if global growth continues to soften?
The quality companies. Yeah, I mean this
Commodity.
Commodity.
Yeah.
Sorry, commodities. I think there you can see that some of the commodities have made a comeback sort of, but a lot of these commodities I think are in mid-cycle. And if global growth slows down, which I think can happen next year, I don't see too much of a rally in the commodity companies in the future. Okay. So I invested in commodity companies in 2015 or 16, if I remember correctly. But that was when they were coming from a bad cycle to up cycle, and I think that is when you really make the big money. Now we can make a 40%, 50% kind of returns in this, but the risk you are taking. So everything has to be adjusted for risk. At the same time, if things turn down, it can again go down 40, 50%. So what I always look at is, what is the risk adjusted return or what is the risk reward ratio. If that is in favor, if you can get a risk reward ratio of, let's say, 1:3 or 1:4 or 1:5, which means that a 20% downside and 100% upside, if something like that you can get, I think that is where you make big money.
Thanks for joining us this morning, Jiten.
Great. Thank you.
All right, so focus on broader markets, focus on slightly more contrarian plays. That's the word coming in from Aurum Capital.